Hello everyone, it's about 4:15 in Chicago. We are on the 18th of January. This is the Cowboy and this is the video for the Pro Room. And I'm going to share this video with the YouTube. I'm trying to share maybe one video a week for the YouTube as well. Just to kind of, let everybody know what we're thinking in here and what our approach is. So I'm going to go straight off the bat and just talk a little bit about what happened today. Today was and just to kind of put things in perspective, today was a little bit more of a bearish day. We seemed to turn quite aggressively after we've had, several, weeks in here of bullish price action ever since, the end December 2022. And this is the first day that we've had more of a larger sell-off. Now, what is this? Is this, do we get excited on the bearish side about one day? Is this just a simple retracement and we're going to go back up higher? What's going on in here? And I have quite a few charts to show you. I'm going to go through them. Hopefully we're not going to spend a lot of time, but I'm going to go through these daily charts in here on the macro review, just to kind of show you how the charts are looking, what I'm thinking. We're going to jump over and take a look at the motive wave and look over at the counts. And I got also some important charts to show you regarding the VIX and the yield curve, and to just kind of put things into perspective on where we are at the moment. I want to also look a little bit at the bonds because, that market is also interesting. So the S&P 500, it's coming back below its 200-day moving average. It really wasn't able to sustain a whole lot of ground up above it in here. Every time it tried, it fell back below. And we're finding probably a little bit of a support here in to the 50-day moving average. Now, there is a large expiry that is on Friday. That's the 20th, is the monthly. And there's a lot of option in there. I talked about it in our shorts that we've opened a couple of days ago. And then we closed some today on the 400 when we sold those 400 calls, because the 400 call strike price had the largest interest, in a very long time. I think there were 105 or 102,000 contracts at that strike, and the market, it's probably not going to reward that before Friday. And, a bunch of those are going to expire. So that's why we took the other side of it. And today we kind of got paid for it. But, leaving that all aside, the reaction here, it's pretty clear that they are rejecting these higher prices at about 4,000 in the S&P 500. Now, if I drop down to the NASDAQ, you can see there's a similar story. NASDAQ did not even reach 200-day moving average in its climb. We've gotten into a very interesting period of, since the end of December, beginning of January, maybe with the return to the new year, the excitement, the Fed maybe pausing, who knows, maybe a soft landing, but it's been a super strong rally in all these, kind of high beta risk assets. You're talking about all the meme stocks, you're looking at Bitcoin, you're looking at cryptos, a bunch of the stuff enjoyed. And I put up on Twitter this morning, a list of, I think, the top 20 stocks performers since the beginning of the year, which is about 18 days, and it's been a lot of garbage in there and a lot of stocks, not necessarily garbage, but, it's not the things that you would expect that would do great when you're starting to kind of turn back from this market. And some things that are just kind of raising questions, at least for me. So, that's a little bit of a sign of maybe trouble. So I don't know if Jay Powell will really like, seeing what's going on in here, but that's a different story. So anyway, that's the NASDAQ in here getting rejected at about 11,600. We'll take a look at the counts. NASDAQ composite here, right? So the large market in the 4,500 stocks in this index. And this one dropped as well, about 1.2%. It's got a big base, same like the NASDAQ up here. We'll see if they're going to retest those. But I'll jump after I finish this. I'll jump and I'll show you, those how those lows differ and how fractured this market is between all these indices is very, very interesting. Dow Jones. On last night's video, guys, if you remember, I talked about how the Dow Jones was not responding yesterday with the S&P 500 and the NASDAQ rallying or holding their highs, and Dow Jones was actually selling on a bunch of stocks in the Dow yesterday, led by Goldman Sachs and some of the other financials. It started to move lower, and it seems that the Dow, it's still, a very kind of powerful leading indicator in here with what's going on. It had a pretty powerful rally. it's starting to kind of fall back, but I really did not expect this move to turn so fast. Now what this does is basically starts to confirm that this is a three-wave rally. Okay, you would have needed this to continue to go maybe in a fourth wave sideways or a 1-2, 1-2 and then push higher. And at the moment, it doesn't look like that's going to pan out. And if you watch this 32,750, if you break below those levels, I think we're going to come back again in a wave 3 or in a wave C. Doesn't matter which one, right? We're looking one wave at a time for now. So that's the Dow Jones, which kind of sounded the alarm on yesterday's market. And you know, Russell in here, I talked about this. We sold the 191, I think 192, and we got paid on those as well. Because why? Because we had a big resistance up here. You know, so, you know, when you see stuff like that, you just sell credit spreads above it, and you're betting that they're not going to go up there. I mean, you got to choose the duration, and, you know, maybe we were, I don't know, a week or a few days out, you know, but, you know, it's stuff like this that usually you want to bet on it, you know, usually holding when you see levels like this. I mean, look at that. You go several times in the IWM and they weren't able to break through it. So here we are returning. We'll see if it's going to be the beginning of something else, but definitely a decent reaction from those levels in the Russell 2000. Bitcoin also had a massive rally in here. It was a little bit delayed. We've talked in my videos about, you know, how the dollar was rallying. I mean, it was selling off and Bitcoin was not reacting. And it was kind of weird what was happening here at the, you know, at these lows. I you know, to be truthful, I did not see this as being, you know, any kind of a bullish development, right? So I got a little bit surprised. And when I was expecting maybe a little bit of a move, to do some kind of an ABC in here, but it really squeezed much higher than I thought, which is fine because I still think, you know, longer term here, we could still be vulnerable on further sell-offs. And until Bitcoin actually creates a 5-wave move, and I'll talk about Bitcoin here in the next video that I'll do for you guys, you know, after I finish this one, and we'll go through the details there. But until you're actually getting a 5-wave move out of here, it's still a very risky proposition to be long cryptos. It's you know, they're trying in here, and but we'll see. I mean, depending on how these markets respond, the rest of the equity markets, you know, you kind of have to be cautious in here. And you know, I said I will get out of my short if you're getting a daily close above 21,004, whatever this high was in here, 21,470 or something like that, and we haven't had it yet, right? And that's still I think the ball, you know, it's still slightly controlled by the bears until some of these swing highs, this 21 and this 25 gets taken out. So that's on Bitcoin, just a couple of sentences in there. Now you look at TLT, that's the 20-year Treasury bond. It looks like it wants to do a 1, 2, 3, 4, 5, and I'll show you the counts in here. Again, coming into the 200-day moving average, expect a little bit of a resistance in here, I think. This is the Treasury yield, and then look at the dollar. I kind of beat the drum in here that, you know, this was a corrective move, right? So we were expecting, following this kind of ABC, originally we thought that this was going to be a little bit of a low, but as soon as we saw an ABC up, you know, we kind of gave up that approach. It's like, nope, this is going to fail lower. It did fail lower, but I think this is a fifth wave. We're getting a doji in here, following by another, you know, small candle in here. It's almost like a double doji after the sell-off. And I think the dollar will continue to, will start to correct higher. It will go towards 105, maybe 107 over the next couple of months. So, you know, I don't have a big signal from the RSI yet. So that's a bit of a concern, but you know, I do see this as being in the final stages. So that I remain with that thought process in the dollar. Just I would not definitely press the shorts, you know, where we are right now. I mean, you're approaching 101, you're approaching 100, which is big, massive support from back when it used to climb and it found resistance. So the market remembers those levels. Gold, we also have short positions in here via GLD, via GDX as well. Gold is starting to respond, you know, massive resistance up into these levels. I'll show you up on the chart. But, you know, a little bit of a rejection. We slowed down yesterday. We created a rejection again today. So, it could be poised for more sell-off in here. And then, you know, copper, wow, dragonfly, I'm sorry, gravestone doji back in here on the daily time frames. That's not a good sign. If it gets confirmed with a sell-off tomorrow in a bearish candle in here, that's likely that copper will sell back towards 3.9. Light crude also tried to rally, still in a big downtrend. You still have the death cross in here. I'm not too excited, and one of my biggest shorts this year is probably going to be XOP and XLE, that I'm going to try to press the downside on those, because I'm not, from the signs that I see on the breadth and the new 52-week highs and all of that diminishing and falling apart, I think the energy sector will not have a good year. And then you look here at the emerging, at the markets outside US, you know, you look here, right, Europe and Far East and, you know, Eurasia, you know, Australia, whatever it's called. Sorry about that, but that's, those are those markets. And, you know, they've had a pretty nice rally up in here. It does look like this is a fifth wave. So, you know, I'll just definitely pay attention to those, but, you know, pretty strong move from the bottom here. Okay, and then volatility index we'll touch here in a second, because I talked about this as well. You know, it's very dangerous to buy stocks when you see VIX coming into support. And this level back in here, it's support. It dropped below into 19, 18, and then quickly shot back up higher. We're sitting about 20, 30. And there's a big chance in here that will explode to the upside. So definitely let's pay attention to the VIX. So, you know, since I'm in here, before we go on to the counts, let me just walk you through some of these important charts. And this is S&P, Dow Jones, Nasdaq Composite, and IWM. I showed this chart in one of my videos on YouTube, I think on the Macro Cafe, I think on Saturday. But again, a market that bottoms with multiple lows, it's a big question mark. Okay, usually these type of situations happen at the high, when a lot of the stocks start to fall before the market actually tops, and before you have a sell-off in the indices in here. You could see, right, that you know, for example, the IWM started to sell off way before the S&P 500 actually topped. 1Q was flattening out, all the while Dow Jones and the S&P was making new highs. So there was a lot of distribution in some of these stocks, and was hinting that this market was probably going to sell off. Now, a similar story happens here from the lows, but I don't really trust it. I think lows are more of a powerful event. Everything kind of happens all at once. You get that massive flush and sell off lower, and then you bottom. You know, I don't want to sound, you know, that I'm trying to scare people, but this is not, I think, how we bottom, unless this is something completely different. You have in here, you know, the lows in the IWM on June 16th. You have the lows in 1Q on December 28th, Dow Jones September 30, S&P 500 October 13th. So kind of all over the place. You know, I think it's a big fractured market. I mean, 1Q and even IWM and the NASDAQ, you know, they're still basically below their 20-day moving average. They're not really responding to anything bullish. The best one out there is the Dow. You know, but even that one is starting to kind of turn back to the downside. So we gotta be very, very careful here. Let's take a look at the VIX as well. And you look, I don't want to talk about all these vertical lines. Basically what they show you is these spikes into this kind of 35 to 40 area where you have massive fear and you're reaching lows into the market. So we're going to keep an eye in case, you know, this ever shoots back up higher, right? There's going to be probably a chance to start thinking about buying stocks or easing on any short positioning. But I want to draw attention to this base that's been on since, you know, February 2022, since the beginning of 2022. And that's been holding several times. And every time the market rallied, the VIX came up into that level 18, 19, 20, and it bounced from there, and the market sold off. It went up there, it bounces from here, then sells off, right? The VIX comes down, the market rallies, but look, each single rally, right, it's a lower high. And, you know, then you have a lower low, then you bounce. So here is, you know, another instance where basically, you know, all you could go, you went a little bit up on the VIX, right? You came down, so the sell-off was not that massive. Then you try to do another rally, came back and retest these lows, and we'll see what happens now. Because the big question is, okay, since we haven't made a new low, and this is a higher low in here, is this the end of the bull market? Is this the end of the bear market? what's going to happen in here. How much do we trust this move? And I'm going to go up on the counts and kind of show you, right? But if you start to roll over, VIX is going to spike up to 30, maybe even higher than that, and maybe that's how you bottom with a huge spike in VIX. So that's on the VIX. And then the other thing I wanted to show you, and I think I talked about this yesterday with you guys on the inverse correlation, not inverse correlation, the divergence between the VIX and the S&P 500. S&P in here did not make a new high, but, and this is the inverted VIX, right? So you can see in here that VIX made a new low. It went to 19, even lower than that, while VIX was not able, while the S&P 500 was not able to move higher with the lower VIX. And you know, that's was just a kind of a big screaming sign that something, you know, like I like to say, Houston, we do have a problem in here. I don't think that's going to be sustainable. So we'll see what happens next. But I like to watch this for these type of correlations, divergences, stuff like that between the VIX and the S&P 500. You know, when we see that there is data that's coming in that's telling you to start to be careful, right? And we're watching a lot of other stuff like the breadth, which I talk about every single week, and you know, some of those you know, other risk parameters that we're watching. Okay, another one that we're keeping our eyes on is the dynamic yield curve in here. And I mean, look at the 3 months, 465 on the 3 month. I mean, this is, I mean, listen, I'm not an expert on bonds. I'm not expecting, you know, expert on yields. I'm barely an expert on Elliott Wave, and I'm learning that every single day. But this is not good. Okay, you take this line and you put it before major sell-offs and below, you know, major recessions and stuff like that, and this is bad. Okay, this is as bad as it gets. So it's pretty high. The cost of money on the short term it's 465. You know, you have to go down, and it's just, I mean, look at this. Okay, and I want to show you also, I mean, this chart. Okay, again, this is the 2 - 3 inversion, and look at this, minus 53 basis points. I mean, I just kind of highlighted these pink areas in here, or whatever they call this purple, and look what happens to the market. You know, I don't know. I mean, I don't think it takes a lot of, you know, a lot of brain to kind of look at this and say, what in the world is going on? This is not good, okay, for stocks, that it's coming off fit for the economy, right? And if earnings are bad and all of that, I don't know. It's something that just kind of worries me here when I look at it. And then if you look at this one, you know, 10 - 2s continues to be highly inverted too. You know, so the 10, look at the 10 - 3, minus 118. When you look at the 3 month, because the 3 month is so high, and then 10 - 2 is negative 65 basis points. So, you know, huge signals in here that we're about to hit the wall with the economy. So, you know, some of this economic indicators we've been getting, they're very bad. And then, you know, the only thing that kind of still hangs in there is the employment, and you know, even that's probably going to roll over, because I saw the data kind of continuing to soften in there as well, right? The rate of change of, you know, job growth, it's coming down. And that's something that we definitely have to understand. Okay, so now let's take a look at some of these charts, and I'm going to share with you also some of the positions that we're short on. So we're going to start with the S&P 500 here, and you see that you know, kind of the main interpretation that we have is this W, X, Y, X, and then another A, B, C. I'm trying to stay, you know, kind of humble and still positive with this market, right? Let's just kind of go one step at a time. I don't think that this is completed yet. And if we're going to be able to do one more leg towards 3,200, here's the thing. Everybody thinks that, you know, hey, you know, it's going to sell off and this is going to be the low, right? And then you're going to go back up higher from here. Well, what if it isn't? Or, you know, you're saying to yourself many times as a trader, well, I'm going to try to go through this correction, and then that correction turns into a massive trend down, and then you're sitting on losses, or you're adding to your positions, or, you know, so you never really know what's going to happen, you know, if this market turns back from this trend line and comes back down, right? Who knows what Pandora box gets opened once you break below, 3,500 in the S&P. I'm not sure. I mean, one of them is this scenario in here. This one is bullish. I'll get to it too. But this one, right? If that's a 1-2, 1-2, and you have another small 1-2 in here, that means that the biggest decline in this market is about to knock on our door. 1-2, 1-2, 1-2, 3, 4 and 5, 4 and 5, 4 and 5. So you gotta have several sequences of decline that's probably going to carry us all the way until the fall by the time this whole thing is finished. So hopefully this does not happen. I do have long stocks. I have a bunch of shorts too, but this is not a pretty picture, and this is as bad as it can get if this starts to fall apart, this market, okay? So I'm not going to hide my head in the sand and just say, you know what are you talking about, cowboy? This is bullshit. Like, it's not going to happen, How do you know? How does anybody know what's going to happen? All right? This is a very valid count, and it's coming after a big move up here. It looks like a fifth wave. So, just by putting our heads into the sand and just ignoring, what's on the chart, I don't know if it helps anybody. So we have to face some of these prospects. Now, sure, if it goes out of here and it starts to climb back above 4,300, right, then these prospects are getting lower, and, they're moving back towards the back burner, as I like to say, in terms of the counting. And maybe this is the one that's going to work out, where this is just a simple ABC. This is a wave 1, that's a wave 2, or you're getting a C wave coming back, and your A, B, just delete that. You're getting an A, B down in C out of there, just a small C wave decline, and you're off to the races, 4 and 5. We'll know once we pass this high, okay, if this pans out, and then we don't have to be that scared anymore, because now we know, that the likelihood of the other count happening, it's way decreased. But this is where we are, and it's a decision moment. So we're probably going to get a sell-off no matter what, either as a wave C or the beginning of a larger decline. And then we're going to see what happens once we approach these levels, right? Because once you get very close to these, things are going to start to look like they're about to break, and then a lot of people are going to freak out. So pay attention to the S&P 500 on all counts, right? This remains my primary, 1, 2, 3, 4, and 5. We'll see if this pans out, and then I want to stay optimistic, so I'll accept the bullish one as well. And then this one, it's the one that's like, hey, we're all getting taken down on stretchers. All right, so that's the S&P 500. That's the one that we're watching. And then the NASDAQ, again, it could be a 1, 2, 1, 2, and then you're breaking lower, or our other interpretation here, where we're just more humble in an ABC for a W up in X, A, B, and then a C wave to come in a 1, 2, rejection from the 61.8 to an ABC in here, and a larger wave to begin 3, 4, and 5, and these lows are getting taken out. So that's the that's the look of the NASDAQ in here. Sorry if it's a little bit messy, but okay, this is where we are. And you could see, I mean, everything kind of stopped at a 618. I think with the exception of the Dow Jones went up. Let's see in here, Dow Jones went to 78.6. So it did just a nice A, B, and then 1, 2, 3, 4, 5. I don't think it's an ending diagonal. I think it's just maybe just a clean impulse. And then, you're coming back. So it's hard to count this again, like a 1, 2, 1, 2. It doesn't look like it's the right count. So I'm going to go with what I think it's my best interpretation, which is that this was a corrective move higher. And if it wants to be bullish, just like in the S&P 500, that means that this is an A, that's a B, and then we're getting a C back towards the trend line. And then we go, that's a 1, that's a 2. The count for that, I think it's right here. Yep. 1, A, B, C for a 2. I don't have the labels on, but it doesn't matter. That's the idea, right? That you're getting. Let me just kind of pull that up if you are just slightly patient. 1, 2, not that strong, right? 2, maybe we can do a pullback to the 50%, to 61.8, somewhere up there. The shorter the better, usually for the strength of the next leg higher. And that's 31,686. Maybe you only get a 38% pullback. I doubt it, but we'll see if it continues to be stronger. Then you know, and here is the other one, the ugly one, right? Just like I've showed you the other two, one flat in B, A, B, C up in 2, and then, you know, you're going lower. All right, that's also an ABC, but this one, it's basically a 1-2, right? The other one was A, ABC for B. So this looks at the higher degree of trend, and that's a fifth wave. So hold your horses, guys, but things are going to be a little bit rocky this year, I think, again. Let's see the Russell, and the Russell is, again, similar count there, and, you know, it's been an uglier count because, I mean, even, okay, did we make a new high? We did not. So it can still be a second wave. However, it's ugly. Maybe this whole thing was just an ABC. Maybe that's much better now that I look at it. And, you know, so we have your W, X, Y, X, and then A, B, C in here, and then you're doing the next decline lower in a wave Y. So it would be another, so let's see, it's an A, B, it's got to be 5 waves. So up here for this wave C, something like that, you know, back towards these levels. You know, look, pretty much a big range bound move in here, right? But this index holds a lot of that, you know, kind of high beta stocks, and you know, it should be vulnerable if we're starting to move lower. All right, so this is on my coverage of this indices, and I wanted to quickly just jump on bonds. I had a request from one of the members to take a look at the 30-year Treasury. This is not the main one, it's up here, and I think what is some kind of a fourth wave, right? We've done a 1, 2, 3, 4. This is better visible on the 10, so don't come at me because I'm starting to count back here. I think we've had some kind of a truncated fifth. If you look at the 10-year in here, you'll see it a little bit better. You know, right there, I think if you start the count actually from here, everything kind of makes sense. Wave 1, wave 2, 1, 2, 1, 2, 3, 4, 5 in the 10, down in 4, up in 5, 4 to 3 into the 261.8 multiple of wave 1, and then we're doing some kind of a fourth wave. Now, if it's an A, and it looks like you might have already 5 wave downs, that means we're going to get a B and then a C. But I'm going to be watching this 311 on the yields as they're selling off. Now, the reason the yields are coming down and the bonds are pushing higher is because I think the fears are starting to come in that we're going to get a recession and the Fed is going to cut rates. It doesn't mean that they're going to cut rates. You're going to get a rally in the markets. If anything, is the other way around. The moment they start cutting, the markets are starting to crash. When they end up cutting, you have a period of a pause and then you start rallying. So, a lot of people that believe that just because the Fed is going to cut, we're going to go up higher in stocks can get wrong-footed here. So I would be very, very careful with that assumption, okay? So that's the TNX. So let's go back to TYX in here. So I think it's a 1, 2, 3, 4, 5, or maybe just an ABC. But overall, I'm looking for this to be a fourth. If it wants to come back, you know, towards 3 for now, but we might get another push higher, right? Hey, what if the inflation continues to push? What if it's rearing its ugly head? What if there is something, right? And the Fed comes out and says, listen, you know, we're going to continue raising, or who knows? But there is a chance here that you could make one more high in yields, maybe from the summer on. You know, the yields are pushing back to the upside. You never know what comes around the corner. So the count here still says that this is probably a 4, and there's another higher move in yields coming. Right, so this is the 30-year bond. If I go to a 1 day, you know, I don't think we overlap. So 1, 2, 3, 4, and maybe a fifth. If we're bouncing back from here once again, then this becomes a 3-wave move. And then, you know, you're probably getting another 3-wave move out of here like this, and you're maybe doing some kind of a triangle in that fourth wave. So I don't have a strong visibility on bonds, but you know, it's what it is for now, and we'll kind of go with it. You know, they pushed higher today, right? On a day that the stock sold off, bonds are pushing higher. And again, why? Because they provide you with yield. And it's a pretty, you know, I would say, I don't know if it's 100% risk-free, but it's, you know, you're getting money for your cash. If you loan it to the government for a short period of time, for 3 months, you know, for 6 months, for a year, right? So you don't have to risk a lot of time to receive that yield. So it's, you know, the stocks have basically competition. Cryptos have competition because somebody pays you 4.6% on the 3-month, you know, or 3% on the 10-year or whatever, 3.6, 3.5 on the 30s. So it's it is what it is. That's why, you know, the bonds are, and I don't think that, what's his name, Jeffrey Gundlach is wrong on this, you know, with the portfolio structure, maybe 60% bonds, 40% stocks, you know. No financial advice from me because I'm not into that, but it makes sense when you think about the yield that you're receiving on this, all right? But hey, people like their risk, people like their meme stocks, and they think they're going to receive a lot more return from those stocks than they will receive from bonds. Yeah, but those people are not moving the markets, my friends. People that are moving the markets are the big guys with a lot of money. And those guys, if they say no stocks, no meme stocks, maybe bonds and maybe safety, you know, that's what's going to happen. Sorry, that's kind of what I see. All right, let's continue to move in here. I'm not going to take a look at TLT because it's just the invert, but I do want to show you a couple of stocks that we're interested in here. So one of them is ITB. On the home builders, I think that's a beautiful ABC up into the 61.8 with the increasing interest rates, with the problems that we might have in this economy. You know, the home builders in here have enjoyed a beautiful rally since the summer of 2022, you know, with a temporary setback in here. But pending some more confirmation, I maybe jumped the gun a little bit in here on my short because we opened shorts, but okay, maybe that's too low. If it's starting to kind of get back below this level, 59.63, I think we might have something on our hands further on the short side. If you break the B wave, then, you know, you can probably start to think that the ITB comes back here towards 40. Okay, so I think it's a pretty decent, could be a pretty decent short. If it moves back above 78.6, I don't know what that is, 74.13 right there. I'll probably be a little bit worried about this, the prospect of a sell-off. Okay, so that would be some kind of a cutoff. You have a big resistance in there as well. You can kind of see it, you know, right there, right there, right there. Right, so somewhere in this neighborhood, it's like things can start to get iffy. All right, the other one is XLE. You know, could be still a triangle in here, one of my counts. And I don't even think that I have my other count. Nope, I don't. I just know that I want to be short XLE because I was looking at the breadth into these markets in here, and it looks bad. A lot of these stocks are you know, just kind of losing a lot of momentum, a lot of ground, and in my view, it's still probably a great short back towards 70, if not even lower. This could be a very simple A, B, and then, you know, now you're doing a 1, 2, so you can have a flat, a big flat, or a triangle in here. So I'm short on XLE, and I'll probably try to press those shorts for the rest of 2023. C's was another short that we kind of talked about right here. I think it's a pretty decent short as well. And yeah, I mean, look at this on the weekly time frames. It just looks bad. Just looks bad. You know, when you see this, you know, it's like, what in the world? Yeah, maybe some people will try to count this as a leading diagonal, you know, 1, 2, 3, 4, 5, and say, hey man, it's a leading. I don't know. I think this is coming there. Then you have another one that I don't really like, is this XOP, you know, and I mean, look at this. Look at this bearish formation right here. Right? I mean, as beautiful as it gets between a doji, an evening star, a double doji, it's you know, it's a gorgeous kind of setup that tells you that this uptrend has run its course. Now you have a 3-wave move in there, and you weren't able to make new highs. You're doing a pretty big bar lower. I don't know. I think the odds favor the downside. Just be careful on that. And then this is one of our shorts here, AR. So I'm going to try to keep this one all the way up here to 20, maybe towards 16. Again, same type of formation here, and it's rolling over. RSG is another one that looks kind of great in head and shoulder. You know, I mean, you tell me. CPG, it's one that squeezed me a little bit higher. Maybe I jumped the gun with a short in here, but I mean, look at that. I don't know. I still think it's coming lower. And then GDX, it's one that we're pressing. Where are you? Right, I might not have the count. you know, but I do have the count in gold, and that's kind of guiding me moving forward. And I'm going to come back to SI, but I want to show you the gold count right here, right? Again, either as a big flat in ABC to the 61.8 retracement to a massive resistance right there. And I think I showed it to the guys right here. 1919, you know, we're stopping right there. Why? Because market has a big memory. It fits pretty well, kind of the count. We'll see if it's a wave, if it begins in a 1, 2, 3, 4, 5 lower, or if it's, you know, if it's this guy. If it's bullish, you know, you can't really tell. Nobody can tell the future. And, you know, but what I do know is the next leg is likely lower, either at the beginning of a larger decline or as a wave 2. How will we know? Well, we'll see what happens here. If it does this, and then you start to bounce again, then you know, you might not have a big sell-off coming in gold. And if anything, you're probably going to push higher. So I know that this is a pretty aggressive count on gold. I understand that, you know, because it's looking for a massive decline here in a large third wave, you know. But hey, I'm not married to any count I'm doing. Okay, I'm adjusting, and if I need to flip, I'll flip like a, you know, like a fish on a dry sandy beach. All right, that's gold for me. And then let me go back to stocks, and it's one of the sweethearts that we shorted again was Silvergate in here. And you know, looking at the daily chart, so I saw a beautiful rejection. I think they just went up to close this gap. I don't even know if that's closed enough, but I mean, it completely got rejected. I don't know, maybe I saw it in 1 hour. So anyway, I'm looking for this to go below 10. You know, this was a failed move, and you broke the trend line again, and I'm looking, this is a shorter term play. I'm not looking for this to, you know, to do anything extraordinary, but for it to maybe get back below 11, below 1088, something like that, and then I'll be out. Guys, thank you so much for watching, and I'll be talking to you a little bit later. This one will be posted on YouTube, so if you're watching it on YouTube, I invite you to try our services. You can see the link below the video. Don't forget to subscribe and like, and I'll be talking to everybody towards the end of the week. And now I'm going to jump over and do the Bitcoin video for the guys in the pro room. All right, guys, thank you so much. Bye-bye.